Oil prices have risen a bit, food prices have risen a bit, but the people are still naive about just what sort of total impact this is going to have. And it reminds me of the way that George Soros made his money, because George Soros rejected the conventional view that the economists teach that finance markets accurately price assets at all times. His argument was that finance markets react too slowly and then overreact. And he made his money by saying that initially they won't see a crisis coming, so he can buy whatever the commodity is or the financial service is cheaply initially. And then when they realize just how serious things is, they go to overreact, so he can sell it for an elevated price as well. That's the cycle theory that Soros had that made him a multi-billionaire. So the same thing it seems to be applying right now. When I look at the prices that are being put on oil and physical food supplies and so on around the world, it's nowhere near as high as it deserves to be given the seriousness of this particular crisis. So what we tend to happen to humans, underreact to a crisis initially, and then when they realize how serious it is, they overreact. We're still in the underreaction phase. We have not yet realized how serious this is, and we won't realize how serious it is until we start to see large-scale famines around the globe. So it's this, we have this mythical idea that finance markets can accurately predict the future. And I had a funny experience recently. I was asked to be on one of those Twitter spaces having a discussion about the impact of the Strait of Hormuz crisis on financial markets. And I heard about 4 or 5 commentators on the financial market talking about what they thought was going to happen. Absolutely none of them mentioned the physical production implications of what's happening in the Strait of Hormuz. They all focused upon the price, as if all that's going to happen is always going to get more expensive. But the basic attitude was effectively all gets more expensive, but there's still as much oil as you want. Now, that's not the case. Oil's going to get more expensive, and there won't be as much as you need. There won't be as much as you want. So we're still in this period where the finance markets are underestimating how serious this crisis is going to be. And then when they do react, they're going to overreact. Now, what this implies is we're going to see financial markets currently being relatively stable. At the moment, in some ways, the stock market valuation of American companies and companies around the world is the highest it's ever been. But when we realize that suddenly these companies can't provide the goods and services anymore because they haven't got the energy supply, because people are going to start starving to death, so they're not going to buy the expensive commodities. They're going to forget about buying that new car, and all the money is going to go on buying food. Suddenly, those stock market valuations are going to crash. So the normal story is a financial market crash is caused by what happens in the finance markets, and then that affects the real economy. This is the reverse. The real economy is in serious jeopardy. The finance markets are underreacting to that because they're staffed by people who've never worked as engineers, never worked on a production line, don't understand what's involved in physical production. They're working in a mythical world where it's all about prices and share market valuations and expectations and so on. They're being hit with the wet fish of what's happening. One of the great expressions in English is one way to wake somebody up is slap them in the face with a wet fish. Okay? Now, this is what this crisis is going. It's going to slap people who work in the finance markets and think of everything about the price of goods and the price of assets and so on. They're going to realize it's also about the availability of those resources. And it doesn't matter what price you pay, you can't get enough energy to keep the planet production systems working, to keep the food systems working, if we have a 20 or 30% fall in energy and a 20 or 30% fall in fertilizer supply. So this is the wake-up call for the global economy is coming through the Strait of Hormuz. Well, if that's whetted your appetite to have a realistic approach to economics, then join me and learn realistic economics through stevekeen.com. If you apply and get fully accepted, and then you can use my Ravel software that you've seen me using in this video. You can talk to me and ask me questions. It's a free book bundle that's available just this week. To apply, go to stevekeen.com or scan the QR code.